Well, good afternoon, everybody. Welcome to the bull session for Valentine's Day 2023. My name is Mark Robertson. I am joined here by my dear investing colleague. Since he doesn't like raconteur, we've had advocator and virtuoso suggested for nicknames for Ken. Good afternoon, Ken.
I, I've been working with you now, Mark, for what, about 15 years, and suddenly I need a title. I need a label. Huh? Okay.
Well, it's kind of a nickname thing. It'll eventually something's going to stick.
Well, at least it's not animal related, so we're all set there.
I don't think you can rule that out, though.
Oh no.
And then we're also joined here by Len Douglas. Good afternoon, Len.
Yeah, good afternoon, all.
And Len is going to join us for a little bit of heavy groundhog, consensus groundhog selections, which Len put together, and that's part of the program here today. So Sean Mace wants me to, we're going to talk a tiny bit about artificial intelligence, AI, and he would like the audience to guess which one of these images on the cover slide were completely computer generated, just by asking it to draw the picture. Any guesses, guys? It's really fascinating when you watch what this AI stuff can do. Any guesses from the audience?
I'm getting some audience guesses here. Kevin says lower left, second one in.
The rhino with
That'd be the rhino head, Kevin. Okay.
Yeah. And that's a wrong. Although, I mean, it's certainly a compelling picture, would be suggestive of that. And so I'm going to tell. Any other quick guesses?
I'm not getting anything else.
Okay, the answer?
Sandy says the groundhog with the crown on.
It is the groundhog. Just simply entering royal groundhog or regal groundhog got that image, along with a whole bunch of other ones, some of them very compelling. But that's the type of, an instantaneous output from one of these programs. Just simply amazing. So again, happy Valentine's Day. Some of the stuff that we're going to talk about, we are going to continue our discussion of Pithecophobia and Ken's fear of monkeys. That will be part of the program.
Mark, I'm going to drill into this groundhog thing just a little tiny bit.
Yeah.
Does that mean that there were 1,000 or 2,000 or X thousand pictures of groundhogs with crowns on? And when you asked for that particular thing, the program just went and found the one that came closest to the English words? Is that what you mean happened?
I think it basically generates the picture. I don't know how it, what source material it uses, but it's not like it went and just got a picture, like
Okay.
you or I would do.
Okay.
And, that's part of the point. It just simply generates that picture. And it's extremely high resolution for that sort of thing. So it's just an example, kind of an interesting, hook to pay more attention to this stuff. We're going to talk briefly about that. All right. We are going to talk a little bit about gloom and doom, and we'll just kind of roll around in the mud with the typical type of stuff. And just, again, we're just acknowledging the fact that it's out there. And I'm just so happy to be with the community of investors who are, by large measure, naturally optimistic. And that's part of all that we do. So, again, that's what the lady on the left there is. We've been through this a number of times, and we seem to come out the other side every time. So we hope that certainly continues. Ken already mentioned it. The wrong team won the Super Bowl, unless you're a Kansas City Chiefs fan, of course. But with the old NFL, Philadelphia Eagles going down, in theory, and it's a theory that has not worked out tremendously well in most recent years, but the Super Bowl indicator basically says that the stock market would have been better off with a Philadelphia Eagles victory. And we'll see about that.
It had a real strong run there for quite a few years, but in recent times it seems to have fallen by the wayside, maybe because of the makeup of the teams that were in the original NFL that are still around today.
Yeah, it could be. It certainly is not as reliable as it's been in the past, but it is still out there. It still has a 73% accuracy, by the way, Ken.
That's
Pretty good.
not bad, but at one point I know it was even more accurate than that.
It was
Yeah,
like 100 after the first 20 years
yeah.
or something like that, anyhow. All right. And of course, we're going to take a quick look at our utility auto pay bill reserve, and we'll spend just a moment with that. So let's get underway real quickly. Advocator, is it Advocator that you want to go with today, Ken? Or
Educator. There we go. Let's keep going, okay?
can't get too fancy, huh? All right, here's our standard disclaimer. See a lot of familiar names in the crowd. Welcome back. No investment recommendation is intended. Everything we do here is for demonstration and education. We're basically taking the lessons, methods, techniques, philosophies, and beliefs of the modern investment club movement and interpreting them and attempting to deploy them together. That's what we do. We may talk about companies that we have in our own portfolios. We'll try to remember to do that. Not too much of that in today's program, but please do your own homework and make your own decisions as you go forward. The roundtable for February, that's our monthly webcast that is generally on the final Tuesday of every month at 8:30 Eastern Time. It's a webcast that we've been doing since 2010. If you'd like to be reminded for that program, it's our annual awards celebration with the golden trophies here in 2 weeks. Send an email to ncavula1@comcast.net, and we'll put you on the auto monthly reminder list. Natalie will send you an occasional email, and no more than once or twice a month, to let you know that that program is up and coming. If you have anything else on your mind, our two email addresses are at the bottom of the page there.
Mark, Natalie's been getting a little bit of email that suggests that people don't know if they're actually on the list or not. If you have not ever received a reminder from Natalie, then you're probably not on the list. And the way that you get on the list is you drop her a one-sentence email that says, please add me to the roundtable list. But it doesn't help to drop her a really long email or an email suggesting that she lost your name or anything like that. If you're not getting these reminders, just we'll be sure and add you or help you add yourself if you need to. But just a simple email will work. And those usually go out sometime in the first 10 days of the month. They went out in the normal time this month in February, and yet she was getting reminders from people that she hadn't sent it out yet. Don't give her a little bit of time, folks, to get it prepared and get it in the mail before you suggest that it's not gone out. February 2nd is a really quick pull of the trigger if you haven't received it yet. So we'll see where we go from there. Okay.
All right. All volunteers, guys. Keep that in mind also. All right. Just a quick look at the stock market. We have had a little bit of a step back in the market to the blue line. It's just our reminder that the stock market tends to behave on kind of that blue trajectory. And after a extremely successful January, we've kind of stumbled into the first couple of weeks of February, not quite as dazzling here in the last few weeks. In fact, I would expect to see that red forecast, the value line median appreciation projection, that's a mouthful, that forecast actually increase with when value line catches up on their homework. Okay, anything you want to add, Ken? We'll keep
Well, I'd like to suggest that box at the very bottom of the screen can take the place of about half of the stuff that goes on the financial news channels and all the talk back and forth about why the market is doing what it's doing. I think that's one of the most succinct sentences that I've read in a long, long time about why the market went down. Good find, Mark. Real good find.
Yeah, and Ben in Grand Rapids, Michigan's own Ben Carlson, he writes a lot of good stuff, and that's the reason it's still there. I mean, it's just hard to argue with that. All right, keeping rolling. I figured I'd get these out, roll these out for Ken. These are this is actually from Ben Carlson, speaking of the devil, taking a look at, near term, 10-year, 20-year, intermediate term, and 30-year longer term returns on the stock market. So Ken, what these have to warm your heart.
Well, it should warm the heart of index investors everywhere, Mark, because what it's demonstrating is that even during most 10-year periods in the stock market, and you can kind of look for a year that you're interested in and then say that it includes that year, and then go backwards 9 more years, and you have the period of time that the number is measuring. But if you're an index investor, there's very few times over 10-year periods where you're actually negative in the stock market if you're going to just stick with your index. I had a long chat with my grandson who's making decisions about what to do with his brand new 401k and his brand new Roth IRA. And we're suggesting that a fair amount of the money probably can sit in index funds until he gets, really comfortable with the fact that he can do better than those indexes. So this is the S&P, it's the big guys, and there's only a couple times when we're really talking negatives. I like the 20-year charts and the 30-year charts even more, though, Mark.
Yeah, and I would say it even extends beyond index investors. When you think about the field of opportunity, of stocks in general, is what this is basically talking about. And notice there's only 2 periods. During one of the worst periods in stock market history, 2008, 2009, the returns actually went a tiny bit negative. So again, if you look at a little bit broader horizon, here's Ken's 20-year chart. And notice that there are no negative numbers on the page anymore. So it's basically positive for any 20-year period, even going back to, for this point here that's shown, the minimum point on here, that's basically starting an investment at the end of the Roaring 20s.
Yeah, it's before the great crash, before the 29 crash. It goes back to 1928. So probably most of us would be very content with starting this particular chart somewhere in the maybe 60s or even 70s, which kind of matches our own experience in the market then.
So the negative numbers go away. Ken, you already probably know the answer to this. This all-time high up here, you are familiar with what that coincides with, right?
Well, I think you're going to point out it's your birthday, right?
Yeah, I mean, think about it. The highest point on this chart is the point where my parents developed and a relationship and got married, and basically made me at the peak of that chart. You gotta like that. All right.
So I need to tell my wife that the lowest point on this chart
No.
Okay. All right.
Not on Valentine's Day. You've already bought two bouquets of flowers. That's enough. And of course, this one makes the point, I think, incredibly. Take it away, Ken.
Well, it's just invest regularly. Stay conservative. Buy good companies at good prices. Buy high quality companies. But of all those things that I said, invest regularly, and try to stay safe. It's not trading. It's not jumping in and out of the market. It's not selling everything you have in October and trying to buy it all back again in December. It's just putting a reasonable amount of money into the market on a reasonable schedule, whether it's quarterly or monthly or weekly or whatever your cash flow says you should be doing. And if you do that over the period of time when you're working, you should have a pretty decent nest egg accrued by the time you leave the job, whatever it is. The key isn't what you're buying, I don't think, at least. I think the key is just getting started and doing it. How many of us could really say we started doing this in our early 20s when we should have? Very few people can make that claim, and yet that's the kind of claim that will make you rich by the time you're 55 or 60.
And I'm very envious of your grandson having that potential, recent college grad.
Yep.
All right. In order to do that, I threw this slide in there because it's something that a number of you have asked about or mentioned a couple of times. In order to do what Ken was just talking about on the previous slide, you got to learn to ignore a lot of stuff. And maybe not ignore, but focus and de-emphasize might be the way to think of it. And just like the lady on the upper left says, I mean, we've been through a number of things which were basically Armageddon and come out the other side. And the links up at the top are basically taken from our expected returns weekly report. And these three came out a couple of weeks ago, back to back to back. And I love Jeremy Grantham, respect him greatly. I've actually spent some time with him in Chicago at the Morningstar Conference. But man, he can be kind of pessimistic. And he's the one that talked about the meat grinder. It's a worthy read, but again, keep it in context. And of course, the second guy talked about we're going to need a bigger boat. And then the other guy talked about Bam Bam and how everybody gets beat up attempting to invest in stocks. This basically is the outlook from Jeremy Grantham's firm about domestic stocks for the next 7 years. If that were, I don't want to say it's impossible. If it were likely, I think we'd have trouble finding anything in the buy zone. I mean, like anything, if that were the case. So tough to say. If you want to look up that article on the lower left with the big red bear, it's a good summary talking about how 90% of the stuff you see on TV is bears basically forecasting doom, predicting 15 out of the next 2 recessions, that sort of thing. It's just something to be aware of as an investor that, again, not necessarily ignore it, but certainly keep it in perspective.
Well, you don't need to be a Pollyanna. You don't need to always do happy talk, but you do need to recognize that happy talk doesn't sell anything. It's the good old-fashioned scare people to death kind of talk that sells things. And for those of you that spend a lot of time on the internet, a lot of time with social media, I think you have a right to be a little bit afraid right now.
Mm-hmm.
You even read what used to be reliable news feeds, and which today are full of a mixture of news and advertising. I used to be able to read that stuff in a magazine or a newspaper, and I could tell the difference pretty quickly between what was an ad and what was actual news. On the internet, it's a lot more difficult to make that decision a lot of times, and there's a lot of people out there bad-mouthing everything because they'd like you to turn to them and give them your money so they can manage it for you. I don't think that when it's all said and done, the track record of professional managers, people that manage money for a living, is all that stellar. I don't think that we can point to any particular person and say he's a slam dunk. If you just give him your money, you're going to make money. We have a couple of people we really respect. I guess I'd like to have made the decision in my 20s and 30s to give Mr. Buffett everything I owned and say, manage it for me. But I don't think he's in that business of doing that for individuals. And even Berkshire Hathaway has had its times in the market where it's had some issues. So like I said, you don't have to be a Pollyanna, but I do think you have to have a relatively optimistic outlook, and you have to remind yourself that we've seen it before, and we're going to see it again, and it seems to work itself out pretty well most of the time over long periods of time. Be patient.
Yep, keep it in perspective. And they spend an awful lot of time talking about it. All right. Switching gears a little bit, talking about two subjects at once here. We actually received an inquiry wondering about the impact of wage inflation. And what I want to do is just take and do a real quick demonstration of artificial intelligence generated response to an issue like this. First of all, notice that it certainly does not appear to be off the charts negative. I mean, it's up from where it was a couple of years ago, but it's basically got some roller coaster bumps in it, and it's a little higher than it has been. The consumer price index came out this morning and is actually up a little bit. Last time I checked, the stock market had done a deep dive and had recovered, and not sure where it ended up by the time we went on the air, but I don't think the world's ending because of the CPI report this morning either. So I was talking about this inquiry from one of our session attendees fairly recently, and I mentioned it to Kurt, our tech guy, and he pointed out that, well, first of all, Kathy Wood, she still is out there, has some pretty good coverage of certain ideas. I would encourage you to take a look at their big ideas for 2023 and maybe hone in on that artificial intelligence theme a little bit and become a little more familiar with it. I tried to do a little bit of catching up myself. What I'm finding is that it's been a few years in the making, but the rate of speed of the development and call it commercialization if you want, has really picked up since Halloween and Thanksgiving of last year. And I think we probably should do a session in the future, Ken, where we talk about the companies that are involved here if it's not too late for some of these already. So something we probably want to take a closer look at. So you can actually
the thing that bothers me, Mark, is that I kind of dread going through the next 2 years as we went through .com and as we went through quote computer unquote, and as we went through a lot of the other cloud is another one of the buzzwords. I'm afraid AI has quickly become a buzzword, and that makes evaluating anybody that claims to be doing anything in that field, it makes the evaluation really tough when everybody claims to be doing it and making it work. I really hope that we're going to be able to find some tools and some methods to gauge the effectiveness of the AI that's being used. I listened to a very thoughtful discussion this morning on Bloomberg about the fact that AI depended on data, and in the absence of masses and masses of data, AI could be extremely unreliable and extremely dangerous. So I hope we're going to find ways to evaluate them to go right along with the growth in the use of artificial intelligence.
Yeah, Len, did you want to tell your story about AI presenting a fictional response?
Oh, yeah. Let's see if I can condense it down to 100 words or less.
Okay.
I subscribe to a online chat called Ask the Builder. It's by a retired master plumber who wrote a home improvement column. He's originally from Cincinnati for like 30 or 35 years. And he's in his golden years. He's still doing this. And within the last 2 weeks, I got a update from him. He said, you really need to read this. It was AI can fool you. The scenario he set was the AI was tasked to write a 500-word home improvement column and include an anecdote about what his name is Tim, what Tim and his daughter Megan did. And he also wrote the same column, and the AI wasn't provided with the anecdote details. And he said, when you read the two, you'll notice that the AI generated one has an anecdote, which is totally fictitious. The AI made this up.
And yet it seems completely
And
not
and he asked his readers, he got about 700 responses from people who follow his newsletter, online newsletter, I guess is the best description for it. And they said that, and they didn't know who wrote each of the two 500-word
right.
pieces. And they all thought that the first one was more positive and more knowledgeable, and the second one was kind of folksy. Well, AI is the one that wrote the first one, and Tim is the one who wrote the second one.
Right, the folksy part of it. It's a fascinating area. I'll tell you. My sister-in-law was here. She happens to be at a Eastern University, and I mentioned to her that she needs to figure this stuff out. And lo and behold, that afternoon they had kind of an all-hands-on-deck meeting about plagiarism and some of this stuff. So it's just wild when you think about this stuff. One of the things that we did, like I said, I was mentioning it to Kurt. This is literally just the question that was asked of one of these Chat GPT or equal type of programs that are out there. Should we be concerned about wage inflation? And there's the completely generated, machine generated response. And it's not bad. It's a little bit nebulous, but as you just kind of scroll through that, looking at some of the things that you want to think about, again, keep in mind that that's the only question that was asked up at the top of the page there by Kurt. And this is the response that basically a robot generated. So it's, again, I think it's a little bit macro, but it's an interesting response. It certainly covers a whole bunch of stuff. And then check out, it continues. Not only that, it talks about the companies which would be most impacted by a wage inflation. You know, and when you start nailing it down to hotels, restaurants, companies with lower cost employees, lower wage employees, it nails it down pretty quickly. And then also it goes on to speculate about companies who would be less impacted. So again, wow. Just thinking in terms of what Len has had to say, and this stuff is taking off. I think it's good to be knowledgeable about it and just kind of keep your eyes open. And then, Ken, we may take a look for companies that seem to be well positioned. Now, one thing that I will point out in some of the stuff that I've looked at, some of the very early advances that have been made in this area have already been kind of scooped up by companies like, you've probably heard of Microsoft and Google, and that's where the war is being fought. And many of the people who are knowledgeable about these technologies think that Microsoft has really leveraged their position very well with some of these technologies. So just something to think about, which is always good news for our largest holding in the roundtable tracking portfolio, that being Microsoft. Any other comments, Ken, that you want to share? I know we could do an hour-long program on what this probably means to educators grading essays.
I'd be interested to see how somebody teaching a class with questions that would compare to this would grade these responses. It'd be a real test, I think, of the whole concept of giving grades and of making judgments based on some answers to some admittedly open-ended kinds of questions. Mm-hmm. We'd have to see where that would finally come out. This does seem kind of general, but then again, it's only a 3-paragraph answer. Maybe if you asked for 30 paragraphs, you'd get something with more detail.
Mm-hmm. And much like Ken or Len's story, you know, giving it a little bit more latitude, you get a little more stuff. All right. Well, speaking of the opposite of AI, no, I'm kidding. This slide probably will show up in a future roundtable, Ken. So I just thought you'd like to be kept abreast of Portillo's in our small company portfolio. All right. So let's get on to talking about our own form of AI, the monkey, and some stock selection. And this is basically a follow-up to the stuff that we talked about last week as part of the Groundhog for the preceding year, the 2022 campaign. We actually used a random number generator to pick 5 stocks for the trailing year. And the monkey came in, I believe, 17th, something like that, Ken. And it's just something that Ken's having a real hard time with, us competing with this completely random chimpanzee. And so I pointed out, well, here were the actual 5 companies that were selected for last year's contest up here at the top, and they did pretty well. 4 out of 5 beating the market, as you can see on the far right there, the green letters. Then I went back and picked 5 companies, again, at random, using a random generator process, and produced an 8-year track record. And again, in a nutshell, Ken basically said, well, what if, that's going to be greatly influenced by a couple major selections. And you can see them right here. Tesla and Owens and Minor had fantastic years. If you were to take those out, you would get more average or below average results for the entire group. So we basically did the thought experiment of, well, what if we picked a few more companies? Fair enough, Ken?
Keep going. I have a response prepared. Keep going.
No. Oh no! You're not going to ask for 40 companies per year, are you?
I'm going to suggest that a single use of a single model is a good way to begin the study and a good way to look at the study. I still think that given enough time, these numbers should come in right close to where they're coming in. But I think that where they're coming in is a little bit high. What I would say if I were teaching statistics at this point with the tools that are available, I would give what the student has done on the previous page, and I would say, well, you now go and repeat this entire experiment for me another 1,000 times. Now, you can do that very quickly using a computer. You can set it up so it'll spit that data out almost as fast as you can create the whole thing. And then let's look at the 1,000-point data point average and see where we're at with this whole thing.
Right.
Is there always going to be something? And if you go back a slide, Mark, is there always going to be a Tesla and Owens and Minor in the sample? Or perhaps there's going to be some negative 90s and negative 95s in the sample.
Oh yeah, we got all of that when I looked at more companies.
Yeah. So what I'm saying is this is a good beginning.
All right. Well, I don't have time to do it 1,000 times. Maybe
I know you don't, and I don't. I'm not asking you to. So
well, I did it 3 times.
Yeah.
Okay. And basically, I have the results of picking 12 companies per year. So that just raising the sample size a little bit, getting it up to 12 companies per year. In my thesis, and again, I agree with you. I think that the monkey making these random selections is going to come in between those 2 yellow points at some point. I think what I'm pointing out here, and this is what I think is important, is we're all aware of the fact that a few companies do an awful lot of influence on the market, with the market cap weighting of companies like Johnson & Johnson and Microsoft and all those type of companies. And I think what the monkey basically achieves when he's shopping amongst, and I'm doing air quotes, shopping amongst 3,000 companies, is he's out there shopping amongst small, medium, and large companies. And so he's basically demonstrating what we already know, that the value line appreciation, that index, gets there because of all of the above investing up at the top of the chart. So I think all that the monkey is really doing is demonstrating, a form of equal weighting equal opportunity for all, even from the tiniest of companies in the top 3,000 companies. So anyhow, that's what I figure it's going to end up between them, as it did. I think it might even favor over the long term the Value Line Appreciation Index, which is just
Well,
another. It's just another
and
way
that,
in my way of reinforcing what we do all the time. All of the above
and
investing.
the conclusion that I would draw, Mark, is that I don't think that any human being has the patience of a monkey. Uh, and again, if you go back to that last slide, and let's just label the first, the one that's set at the bottom, let's label it year one, and then go up the chart, label it year two, year
All
three,
right.
year four, etc. I'm just not certain that there's any human being would have the patience to last until it gets to that time when Tesla's a choice. That would be year 6 in this particular
I got you. I got you.
iteration. And I think that those of you that are looking at the monkey as a sort of a solution to what might be going on, and suggesting that the stock market is nothing but a random walk. I think you need to grab yourself back by the scruff of the neck a little bit and hold up and say, granted, this might be something that would work over an 8 or 10 or 12-year period. And but the other side of the coin is, would you be willing to put your real money in a test of this particular situation? And I'm willing to use real money to test what I've been doing in the stock market. I'm not sure any of us are willing to use real money to test this particular method.
All right. So you're kind of making my point.
Yep.
5 companies is probably too few in this
Yep.
type of a situation. You're going to have a lot more randomness.
Yep.
That would be my expectation. So let me go ahead and get us to the bottom line here. Here's what it looked like with 5 companies selected per year. That's what we talked about last week. And you have this Tesla year in here, Tesla and Owens Minor. And all of these are fairly average results, correct? Good so far?
Yeah, and the last 2 as well are fairly average.
Yep.
Yeah.
Here's what it looks like if you select 12 instead of 5. And the orange bars are the ones with 12. And what I think you see here is a demonstration of diversification. Notice
So did
that
we just take 5 and add 7 more to it?
that's what I did. So basically the
Okay.
Tesla is still in there, but
It's still in there. Okay. Yeah.
now you basically have evened everything out. And I think what this basically proves is that 12, well, it's certainly a piece of evidence that 12 companies is more reliable than 5, but that all of the above investing still is a pretty good idea.
And it pushes it closer to the $1 million line, which is not a whole lot of growth then, right?
Well, it still beats the market.
Oh, absolutely. No doubt about it. But I'm asking myself, is it kind of like playing craps and hoping for boxcars to come up every single time,
All right. Len's waited long enough to talk Groundhog, so let's go ahead and move on.
Okay.
I don't think with this debate's over, but I do believe that it does demonstrate that all of the above investing works, that being investing in a blend of small, medium, and large companies. We already know this.
It's still annoying. Okay.
And you're still all right. Okay, here is the update on where we stand so far. And lo and behold, David Einhorn is actually still in first place as we start a new campaign. Buffett is up near the top. Len's going to take us away here in a second. He's in the top 40 also at number 23. Few new names on the chart, but there's also some fairly reliable names, I think. Well, John Kimmel's up there. I think George Mackey is on here also. Where did I see George? George is at 27. I mean, there's some fairly regular names. Sean is back haunting in the 30-something position. It's kind of like I put Bill Murray on the slides because these numbers are an awful lot like last year. I hope we're not in for another year.
I'm immediately rooting for the North Dakota Cass County Tycoons, okay? Go. All right.
Yeah, they're newcomers and they're doing pretty well out of the box. Oh, and here's Kim, one of our favorite damsels, back in motoring. So hopefully we'll hear back from her here fairly soon also. All right, so Len, why don't you go ahead and take it away and describe what you've done for us? We do this every year, and I think it's an interesting thing to have as a resource as an investor, at least.
Okay, well, the Mark asked me to identify the top 20 equities picked across the population of all the submissions for the 2023 Groundhog contest. And I can tell you it was over 1,000.
Yep.
And my methodology was Mark had provided an Excel spreadsheet that included all of the picks. So to try and compact the information to a usable form, what I did is I copied all of the first selections to a new workbook in an Excel spreadsheet, then copied all of the symbols of the second selection and added that to the list until I had a list including all of the 5, 6, 8, 10, 12, 15, and 20 position dashboards or submissions, all in a single column. And then I used the power of Excel to sort it alphabetically from A to Z, so it would put all of the Apples together and all of the Googles together, and then looked at that and extracted the number of selections. By the way, Google was the top selection. It occurred in 64 of the submissions. Not all was in the same numerical position, but 64 of them. And Western Alliance was number 2, and then CLFD, Clearfield, and going down. And I wound up with what was supposed to be the top 20, and then we had a disrupt in the force because the 19th and 20th pick were ties. Actually, there's 3 ties in there. So anyway, and then I built a public accessible dashboard, which Mark has got the link to it on the bottom of the screen, with all 21, and assigned each one of them a $50,000 contribution. And this is what you get.
Well, fantastic. I do think we can probably dub this, give it a nickname. Big on nicknames here, Ken. There's a lot of Ken Kavula influence on this this favorite list. So this is kind of a groupie phenomenon.
Yeah.
I'm noticing Clearfield up at the top up there, Mark, and I don't have Clearfield on any of my entries. So.
I know it. How many did you present that besides at Manifest? Have you presented that somewhere else out in the world? Or
no, that's the only. Well, that's not true. I also presented it at a Ticker Talk as one of my 3 choices at a Ticker Talk.
Oh.
But
did it appear in
Len? Wait, I have a question for Len.
Yeah,
Len, once you had that list alphabetized by ticker, did you use the count function in Excel to find out how many Apples there really were or how many Googles there really were?
No, because I was searching for the biggest ones. So it was real easy to scan through the list. And you know, when I found a larger than 10 repeats, it was easy to focus in on that one to get the biggest ones.
I'm just going to say, what you did is exactly what I do when I put together our most widely followed stocks for a your choice portfolio in our contest.
Mm-hmm.
And I use the count function and get the count function to go back to 0 every time the name changes after they're alphabetized by symbol. So, and then I can take and write that number at the last entry, and then I can put them back in numerical order just by the ones that have an entry next to them, and my list is complete then at that point.
Yep.
All right. Well,
If that
we can
makes
let
any
you guys
sense
geek
to
out
you.
here.
Yeah, that's really getting geeky, but it really
Yeah,
works on
well,
Excel.
we're
Nice and
gonna
fast.
let Len get really geeky. I just wanted to point out before we move on that this really is it's an important barometer for how well everybody's doing in the groundhog. Again, 1 year period, who knows? But for a list of companies coming from this community, you know, with a long-term outlook, notice that the overall projected return checks in at 18, extremely high quality at 87. It's a pretty interesting shopping list to at least be mindful of for long-term opportunities also, not just for a contest. So one of the things Len wanted to cover, he got into, is this something that I think many people who are kind of dashboard or excuse me, spreadsheet jockeys probably should be reminded about this. So Len, why don't you go ahead and give a quick summation of this reminder?
Well, and you've already set the stage. I don't think that this capability is widely known in our community, but what you can do is when you have a list of stock tickers like this, you can highlight the list, go up and click on the data slide. And next slide, please. And then select stocks from the convert to stocks. And as it says, it'll convert cells with company names or ticker symbols like in Microsoft to get current stock info like price, exchange, and more. And you can click on the tell me more, but let's go to the next slide. And this is what Excel returns to you. And I expanded the column so you could see all the stuff that was there. But the important thing is once you have that column highlighted, this little icon appears just to the upper right. And if you click on that, and the next slide will show us what's in it, it gives you a number of choices. And as you notice the scroll bar, the choices just keep going on for at least 2 windows. So anyway, if you pick employees and click on it, and next slide, you've now got a column with a number of employees for each of these selections. And if you do it again, next slide, please.
Just as an editorial comment, when Amazon says they're laying off 5,000 people, keep that number in mind.
Yeah. And I was having trouble getting a picture of all the selections that are on the second page of this by scrolling down. So I picked headquarters. And next slide, please, and you'll see the result. And you can keep doing this. I believe there are almost 4 dozen or more criteria you can select, and like current price and 52-week high, 52-week low, last closing price, on and on and on. And if you get a column here that's not what you want, like headquarters, you can just highlight column D in this case, which is where it starts, and hit the delete key and go on, and you keep highlighting the first column, and you can build yourself a table.
And I think, go ahead, Ken.
Len, could you repeat for the audience again where the data is coming from?
Oh, sure. It's the convert to stocks function. I want to point at my screen, and obviously you're not seeing. You go up to the top row and click on data, and then you, when data opens up, the data ribbon. Yeah, next slide. And you click on convert to stocks, which changes your column of stock picks to stock information that Excel recognizes.
I think the answer, part of the other answer is that it's coming from a variety of different sources. I'm not sure what.
I actually pursued that. I believe Refinitiv.
There's probably some fact set stuff in there also.
Yeah.
So, again, I think this can be a powerful function if you've got a watch list or something that you're maintaining with a group of investors, like an investment club. There's a whole wealth of stuff that you could actually put together.
Let me give you the manifest investing idea. You take this and you export your dashboard to Excel, and then you highlight the tickers. You can add to the presentation of your dashboard with all kinds of additional statistics.
Absolutely. Probably something we could demonstrate at a future session.
Yeah, sure. Okay.
Any other questions?
Mark, we're getting a whole slew of questions here, and let me ask a few of them because they're good questions for everybody.
Mm-hmm.
Are there public dashboards available for people to take a look at this time? And if not, when will they be available?
Haven't put them together yet. We're hoping that Kurt will put together the scorecard again this year, the scoreboard, and we're going to try to do it with a way of basically giving a real-time scoreboard, making it available on the homepage. Don't know if we're going to be able to do that, but that's kind of what we're waiting for. Other than that, we can put together a table of the public dashboards for the individual participants. So we'll know within the next couple of days.
Okay, and then Mark, can you give us a rough idea of how many entries there were?
We're up at 170. I've got waiting for a couple of clubs yet that we're meeting this week. So we're in the 170s.
Okay, you're anticipating the next question. Will you still take a club entry, and or will you take an individual entry?
An individual entry will require some form of a bribe. The club ones we continue to recognize for January, just simply for the club dynamic of monthly club meetings.
Okay, and then
Chicago hot dogs work for a bribe.
Oh, Portillo, a gift certificate to Portillo's. You'll probably get some type of an unseen advantage in the score.
You might win, Len. You might win the contest. Okay.
I'm already in it.
Mark, our friend Kevin is telling us that this data is being drawn from Refinitiv, and I think that's the same answer that you and Len both gave.
Yep.
And Kevin has found a URL under support.microsoft.com, which explains all about the stocks financial data source tab, about that whole thing. So if you go to support.microsoft.com, you should be able to get a lot of information about that tab if you're looking for extra materials here.
Yeah, and Kevin, you're certainly welcome to post that, or Len, in the forum discussion for the forum thread for this session.
Oh,
Yeah, Kevin, I'm not going to put it in this session because it's too hard for people to copy. But if you'll put it into the forum for us, that would be greatly appreciated.
okay. One caveat on this, I am sure this is in the version of Excel that's in Microsoft 365. And it has been since 2019.
Yeah, your versions
Yeah,
don't make a difference.
I don't
everything
have
that
the standalone anymore, so I have no way to test and see if it's also in the standalone Excel.
Right.
I go back and forth between the two, and then without much problem at all. And I use most of these functions in 365 and in my standalone version on my laptop. So I'm pretty sure that the answer is it'll be supported by almost anything that's relatively recent.
Well, thanks, Len. It's good information, and even if you're not a totally geeked out person, it can be fun to tinker with and discover. So thank you very much.
Okay.
All right, one last subject before we sign off for today. We have had a development. One of our 5 chosen utilities was bought in the utility reserve. This is our auto pay portfolio, and I've just taken a snapshot of the ledger. Just want to point out that South Jersey Industries disappeared from the planet. Well, not exactly. The stock as an individually traded security did. Purchased for a little over $36 a share back at the beginning of the month. So what I've done at this point, and I haven't decided to make this permanent because I didn't do any utility shopping. We had talked a little bit about this particular exchange traded fund, JEPI, and I basically just took the proceeds of sale. You can see it down here, the acquisition and the proceeds of sale, this 12,631, and basically invested that back into the JEPI exchange traded fund. And the reason I did that is just simply it's an interesting fund to take a look at. It's a collection of blue chip companies with an average dividend yield of about 3%. So blue chip, 3%. And then this is one of those funds that has done some dividend enhancement with covered call writing on the stocks that are in the portfolio. The result of that is a yield, basically an enhanced yield of about 10% per year. And I find that to be kind of interesting. So you can see the first dividend payment has already come in did I leave it on the page? Maybe I didn't. Oh yeah, I did. So here's the first dividend payment during the month of February, just a few days ago. This is that enhanced dividend yield. You can see that is already pretty large relative to the other dividend payments that we collect from our utilities. So it's actually going to generate pretty good surplus, and we're going to want to talk about this in greater detail at a future session. But just put it out there as something to think about. I have invested personal assets into this JEPI ETF for this very reason, and I think you can see that this type of $13,000 investment throwing off this type of a monthly cash flow is pretty friendly to this model. So we will watch it, and we'll actually talk about possibly doing some regular investing into something else alongside of that if we decide to leave it there. So just
Mark, I have a good question here. There's no mention here of paying taxes on the interest, for example, that's being generated, or any of the other. Some of the other companies are generating some interest too. I'm reasonably certain they're generating dividends. Should that be part of this simulation, the actual payment of taxes on the dividends that are being generated?
Yeah, it is. In fact, here's just the regular interest on the account. That's just for the cash. We obviously keep track of the dividends. We did pay taxes last year. So it's just not shown here.
Okay.
I actually have one of those things in here showing it's a break. Some of these fields are
Okay, so it will appear on the list as maybe when we get closer to April or May, then it'll appear on this list as a payment then, right?
It'll appear on April 15th. We don't pay the taxes until we have to.
I think that'll be clear to the person asking the question then.
Yeah.
Okay.
And this one's due next year. Our long-term
Right,
capital gain on South Jersey Industries. So that's a taxable gain for next year's taxes.
Yep.
So we are attempting to simulate, all those types of things, all the dividend stream, the monthly payments. You see the utility payments on here. Those were escalated with the increase in energy prices for this year. So you can see that those have been made. So again, we invested $45,000 into these 5 utilities originally with $300 cash that you see here almost 2 years ago. And every single month, this utility portfolio has paid the utility bill since then, and it still has $343.99 in the checkbook.
Yeah, I'm going to suggest to some of you that are having a little tiny bit of trouble understanding what's going on, that if you try to follow the ticker column, that's the second column, and you try to follow the current value column at the same time, I know they're widely spaced, but it can be done, then you can see the money flowing in and out of this account, and you can then understand that what started out as a $330 balance, cash balance, has now it's basically stayed the same. It's $343.99 cash balance now.
And again, after paying all the utility bills and the taxes, we basically invested an extra $400 back into that JEPI.
Right. It's important, again, for those folks that are having a little bit of trouble with this, to understand that Mark has left out some of the accounting only because there's not room on the slide for it to happen. Right there where he drew those really long lines, there's other entries that have been left out of that right there.
Yeah, every month since then.
Yeah.
So we'll probably do a little bit more detail. Just wanted to make our primary purpose here is just flagging the fact that one of our 5 utilities has gone away. And
Mark, does the entire accounting reside on the manifest forum somewhere? The entire spreadsheet, all the lines?
Well, we've done like quarterly updates, so you can actually see all the pieces, but I suppose we could put up a complete accounting of it somewhere.
I think that there might be interest in seeing that whole thing. I think that will give people a little bit of understanding, especially if they're new to what we're doing here.
Yep. It is a fascinating concept, and we probably should put together a complete workshop on it all by itself, frankly. I mean, it's just, especially with what this high yield, and it's not a typical high yield opportunity. I still don't know what to think about it yet.
Mark, Cynthia is asking, do you know what JEPI actually holds? She knows that they're variations of various things. Do you know what they actually are, though, they're holding in their mutual fund? Or where could you go to find out what they're holding?
If you go to Manifest Investing and look at research, click on funds, that is one of the first funds that we restored, and you can actually look at the holdings. I can actually go and do that as we close down here, and then we can take a quick look at it. But it's just a bunch of blue chip companies. You'll find that it's quite interesting. We'll actually go live and do that. All right.
I've stayed pretty current with the questions, so if we're at the end here, we can say good afternoon to folks. And you want to stay on then and go live and show where you came with that then?
I think my internet may have bounced out on me a little bit. Can you still hear me, Ken?
Yeah, I can hear you, Mark. And what I said was I've stayed pretty current with all of our questions here. So we are at a good stopping point.
You still hear me, Ken?
I can hear you, Mark, with no problem. Can you hear me?
I'm hearing both of you.
Yeah, I know. And I'm hearing you, Len, but Mark's not hearing either one.
He doesn't appear to be muted in the,
No, I'm trying to check a couple things right here. Let's try just a message, Mark.
Well, Ken, we seem to be having some internet connectivity problems, so we'll just go ahead and shut down.
Okay.
If you can still hear
All
me.
right. Yeah. Well, I sent you a message, but you have to take the time to look at it. So we'll just say good afternoon, and we'll be back with you again next week, and maybe we'll have Mark. Good night, everybody. Good night, Len, and thank you
Are
so
you still
much
there,
for
Ken?
your presentation. I'm still here, Mark. Are you hearing me?
Ken, are you still there?
I'm
All
still
right, we'll just go ahead
here.
and shut down. We seem to be having some internet connectivity problems. And take care out there, everybody.
okay.